Saturday, January 14th, 2017, Monaco 64, home of alternative economics and contrarian views. So I'm going to be covering all the major markets today, just looking at the technical picture through charts and seeing where we are in terms of all the markets. And I'm going to start out with gold. And bring up a chart, XAU USD from Bloomberg. You can see that Bloomberg considers gold a currency, traded as a currency by the bullion banks. So we finished the week at 1197.34. We did get up to 1207 on Thursday to 1207. I think the high yesterday was 1201.50 or thereabouts. So you can see that for the year, gold is up 4.34% year to date. And from that chart, just looking at it, that 1200 level is a key level. We need to get back above there and close, next week, maybe above that level to continue the move higher in gold since we've had, since the Fed meeting this December. The low was around 1122. We're now 1197.34. You can see gold was up almost, almost $2 on the day. That was it. We did trade below, down to 1187 intraday, but we recovered well late in the day. So these are spot prices. It's not COMEX price. So that's gold. Picture still looking positive. I'm going to bring silver up now. So XAG USD, another currency, according to Bloomberg. They're not wrong. And you can see I've just brought up the chart. Silver chart, looks. This is a 1 year chart, so it's not a 5-year chart like the gold chart I showed you. But as you can see, we're up 5.62% already year to date. So doing fairly well. And looking at that chart, to me, there's a few barriers in silver. 17 and then 1730, which was the low last October, beginning of last October. And then finally, 18. We really need to get above that 1820, 1830 area in silver. We need to see silver basically go above 17 next week and stay above that level. So that's the picture for silver. Now I'm going to look at the dollar index. And I've got here a 5-year chart. And the reason I bought that 5-year chart, you can see the high in 2015. There was like a double top in the beginning of that year and the end of that year, just above 100. This year, late 2016, we got up to a high of 103.82, and we're starting to turn back down. We closed at 101.18 last week or yesterday, as you can see. So, and the dollar index is down 1% year to date. Key level is going to be that 100 level, because that would, negate the breakout that we've had, above 100, negate and go back below those tops from 2015. So that's the key level to keep an eye on, 100 and above 103.80. So that's what we need to keep an eye on the dollar index, which basically is made up of mostly the euro, the yen, and sterling. So what else are we going to look at now? Now gold and British pounds. A lot of my viewers are, of course, in the UK. So this is a 1-year chart. You can see that the range has been 757 to 1,067. So 300-pound range. It held just above 900 after that correction we saw after the U.S. presidential elections. I think that's a key support there, 900, as you can see from further left from the chart. It used to be a big resistance and we broke through there after Brexit. And yeah, we closed the week at 981.68 XAU GBP, another currency, cross currency. Basically, I guess we need to get above 1,000, and then the next resistance will be 1,067, which was the high from last year. That's gold in pounds, British pounds. Let's have a look at silver in British pounds. So this is a 1-year chart, just like the US dollar silver chart, XAG GBP, up 7% year to date, so good performance. Gold, by the way, in pounds, let me tell you, it's up 5.6%, so another good performance by gold against sterling as well. Silver here looks like 13 is held. Looks quite positive, and basically just the round figures, really we need to get above 14, 15, and the recent high last year was just below 16 pounds for silver in British pounds. So now we're going to look at the 10-year yield, and let's look at it, first of all, let's look at a daily chart from yesterday. I haven't spoken too much about the bond market and yields lately because the market's kind of stabilized. But I wanted to show you that yesterday, intraday, we went from just around 233 all the way up to 243. So a big move there, 10 basis points move intraday higher. And we finished around 240. The 10-year yield, that was up just about 3.3 basis points. As you can see, the range for the 52-week range is 130, 180, or about 132 to 263.94. So we need to, for bonds to be a trouble for the markets again, we need to get back basically above 260, 264. As you can see here, this is the annual 1-year chart. We bottomed in yields last July, and it's been almost a one-way street higher. We topped at 264 in the middle of December, and it's been coming down since then. But we need to keep an eye on this. If we get back above 240 and go to 250, then we could see bond yields go up again and bond prices come off. One of the biggest bond fund managers, Bill Gross, usually called the Bond King, he's looking at 260. The reason why he doesn't look at that is because that's the highest closing yield last year, 260. 264 was an intraday high, so not much difference there. 260, 264. I personally think 264 is more important. I know I'm not the bond king, but I have worked in the bond markets. So that's the 10-year yield. And now S&P. S&P, as you can see, we've been rallying. We rallied really well after the election in November. We went from below 2100 to an all-time high of 2282, and since the beginning of December we've just been flatlining. We need to get back above 82 to resume a bull market, if it is going to resume. I'm not sure. We'll have to wait and see. Below, you can see 2200 is the key level, really, I would say. That's the S&P. And now to finish off, I'll finish off with Bitcoin. Not much has changed since my last video on Bitcoin, where I talked about a possible teacup and handle formation after that big move from around 1150 down to like 850. Bitcoin made in one day. And you can see last week was quite rough as well. We got below 750, and Right now, I guess, as I speak, we're around 823. But it's held that upward trend we've had in the mid since from the middle of the chart there, as you can see. As long as we don't drop below 600, 550, I think Bitcoin should be okay and should consolidate for the next few months or so between 750 and maybe even 1,000 before it resumes higher. So that's the technical picture for all the markets. Next week, Monday's a holiday in the States, so the markets are closed. Martin Luther King Day. Then on Friday we have the inauguration. Yeah, Donald Trump. That would be big. Really interesting to see what happens, in terms of the markets after Obama's gone and Trump is in charge. So that will be the big event, Friday, January 20th at high noon Eastern Standard Time in Washington, D.C. So if you enjoyed this video, please give me a thumbs up, share it far and wide. And if you haven't subscribed to my channel yet, please do. And if you'd like to donate to my channel, there's some links below in the description. I'll talk to you later. Take care. Bye.